Hey guys, this is Trevor Probant. This is Land Investing Dirt Road to Wealth podcast. Today I have Jon Jasniak, the man, the myth, the legend, that came onto the podcast, and we are going to talk real talk today. And we don't know how long it's going to take. We don't know what direction we're going to go, but we're going to do a deep dive into Jon yesterday, today, and tomorrow, where his business is, where he's falling on his face, where he's kicking ass, and hopefully it helps you because we're just probably going to do a little therapy session with each other. So, anyway, Jon, people that don't know you, quick intro, kind of where you came from. Obviously, you're an amazing human being, being a Red Raider as well. Texas Tech Red Raider. But anyway, besides that, let them know kind of where you came from, what you're working on now, and then we're just going to freaking talk shop.
Let's go, man. Let's get into it. For those of you who don't know me, name's Jon Jasniak. I've been land investing now for 8 years. Also own the town of Cornudas out west near El Paso. Graduated from Texas Tech. Trevor, appreciate the shout out. Us Red Raiders stick together, and we are off to the Sweet 16 as of this recording. We just beat Drake yesterday, 2 days ago, whatever it was, and now we're off to the next level in tourney. So yeah, proud Red Raider, engineer by trade, somehow found my way into the land investing world, and it's kind of, I guess, getting longer of a story day by day, year by year, which I'm sure we'll dive into. But yeah, time flies when you're having fun, I guess.
Doesn't it? So Jon, did you go to petroleum engineering? Was that your degree?
I did. I spent 4 years getting the petroleum engineering degree from Tech. Came out of school, worked 3 years in industry drilling oil wells, kind of started building a land business on the side, year and a half into the corporate world. And after a year and a half of growing the land business, I decided that I wanted to do it full time. So it's not something that I just kind of willy-nilly got up and quit my job and started. There was a lot of grinding there on the side.
Well, and the reason I bring that up is because people that don't know, and that's the whole reason you're from Michigan, right? Came
Yep.
down, went to Tech, probably because of the petroleum engineering program, right?
That's right, yeah.
Yeah. The people that don't know, that is an unbelievably competitive, difficult program. It usually takes 5 years, at least,
Yeah.
for most humans, right? And so, like, Jon is a driven human being anyway, right? If he's willing to come from Michigan all the way down to the Harvard of the Plains, as we like to call it.
I've never heard that one. That one's generous.
That's what my dad calls it all the time. Anyway, and so like for him to come down there, he already had a plan and an idea, right? The interesting thing about that is you bust your ass for 4, 5, 6 years. Again, there's some of these guys that are very successful petroleum engineers that took 5 or 6 years to get that degree, right? Like we know them all, right? They failed some of the smaller stuff. They worked their ass off, finally got through the process. That is a very, very difficult program, and you committed 4+ years to it, right? To get there, and then you went into business. Who did you work for on the energy side?
SM Energy, St. Mary's out of Midland.
Yep, I know exactly who they are. So he committed more time to getting that degree than he did working in the field, right?
Yeah, I guess I've never thought about it that way, but it's true.
But that's the thing about it. So what made you just want to throw up on your shoes besides living in Midland, right? What made you want to throw up on your shoes whenever you went to work every fucking day, right? Like what forced you to be like, hey, this land or this whatever it is, I gotta get the hell out of here.
Well, it didn't just start with land. It was I was kind of when I graduated college, I had gone to work in the Houston corporate office for a short amount of time, and I was in the business development unit. And I remember just being super into it, man. Running all these economic analysis and just putting in 11 out of 10 max effort. And it came to bonus time after my first 6 months. And my manager, Dylan, great guy down in the Houston office, was like, we rank you 0 through 5. You get a 0, you're basically fired. But, we don't give out 5s just because it just is. You can't get a 5. It's too perfect, basically. And so I ended up getting a 4 out of 5 on my first performance review. and I had gotten like, an extra, I don't know, $5,000 or $6,000 or something on my bonus. And I just remember thinking to myself, like, man, this is freaking stupid. Like I just put in, probably an extra 20 or 30 hours a week uh, for an extra $5,000 over 6 months. And it just really kind of lit a fire under me and just really frustrated me to, I don't know, to know that the corporate world wasn't for me. And so I was super into penny stock trading at the time, cold dual monitor setup, studying charts, all this good stuff. And I had a couple other little product and blog businesses, oil field related, that I was trying to start. And then it wasn't until 2016, late 2016, I heard our boys, Mark Podolsky and the Land Academy crew on podcasts, and I ended up buying both of their courses and started the whole adventure into the land industry. I don't know. It was, I guess, just the right place at the right time. I heard the podcast and bought the course. I'd never really bought a course before, which, nowadays courses are the hot craze. Everyone sells a course and online education, which I'm a big fan of. A lot of them are trash, but
I buy a course a year no matter what, dude.
Yeah, dude.
There's something for 5-10 grand. If it gives me one deal or even a half of a deal or a way to add value to a deal, it's like, hey,
what's been your favorite course? Do you have a favorite course you've ever bought?
I'm trying to think. I mean, I've all the land ones and things like this, but none of them. I came a little bit different, right? Because what I do now, my family's been doing for a long time. I'm just kind of putting rocket fuel onto it. It was more of, hey, this is kind of what we do. Like, how about you actually pay attention, dumbass?
Yep.
Yeah, you know what I mean? But I don't know. I mean, all of them are good, even if some of them are even some of them that are bad. But actually, one of the ones I actually like, it actually is the shirt right here. It's Asian Investors. It's
Agent investors.
Just it's a realtor deal. Ryan Zolan out of Phoenix is his name.
Okay.
But what he does is he does wholesaling flume, but all he does is works with realtors, right? And the cool thing, what I really like about him, is he's a really young guy, hard charger. John, you would like him a lot. You and him, process, younger, like all this other stuff. He's even younger than you. But like the way he goes about it, but like some of the guys that are in his realm there, they got a guy named Sean that is in San Francisco, and he made $3.5 million doing nothing but wholesaling products from real estate agents, right? But the number of text messages, the number of follow-ups, the number of systems, the number he does all this stuff like that, it's insane. But more importantly, I really like the vibe of it, right? And it's funny. It's funny that I'm actually
yeah. You should be able to get a golden nugget at least from every course you buy. I mean, it's all about what you put into it is what you're going to get out of it, But I don't know what the industry standard is, but it's like well over 50% of people who purchase a course never even open it, which is insane.
100%. But, that's true with everything, right? We all know how to save money. We all know how to get in shape, eat whole foods, lift weights, run, get to sleep, right? Congratulations. There you go. It doesn't sell very well. You know what I mean? So, yeah, man. But that's the cool thing about it, John. Like, you would have been successful in whatever you decided to choose, right? Because you had that mindset and the work ethic to do it.
Yeah, I mean, perhaps. I think a lot of it is just the ability to problem solve and the determination to not give up. I mean, a lot of people hit roadblocks and they just give up, and that's a big thing in real estate. Is it's basically problem solving, right? So, whether a plat's not getting approved or the road contractor messes up or whatever it is, I mean, it's just all about your ability to problem solve. So you just have to think outside the box. You have to have really thick skin too. Like, too many people are just too soft.
Oh, for sure. For 100%, right? And you're just only person you're quitting on is you. That's the hard part, right? Only person you're hurting is you and your future you, man. That's the hard part for sure.
What do you think about the flipping space? Because that's where I started is, the 10-acre West Texas desert flips. And I think people are having a hard time with that right now. So I hear it's getting a lot more competitive. I guess I kind of hit it the right place, the right time in late 2016, early 2017, where I had like my pick of the cheap 10 acres in Hudspeth County.
Dude, I drove and bought 100-acre tracts for $5,000 from the county in Culberson County. I bought them from the county. at the time, right? And then I drove to Sierra Blanca one time and hung out with the main gals. Have you ever been to the office, the main office there? Oh shit, are you there?
Like the county offices?
Yeah, the county
The
office in
county
Sierra Blanca.
offices a few times, yeah.
Yeah.
Mm-hmm.
Anyway, one of the main gals there was literally, and this is a story. I think we came from a land academy. We were actually eating Cheetos and listening. I sat down next to her. She was trying to bring everything up on the board that the county owned, and she literally we were listening to Led Zeppelin, and she was feeding me Cheetos, and we were looking at properties. No bullshit. We were looking at properties, and she's like, I don't know where this one's at, but you can buy it for like $300. I was like, 10 acres? Sure, I'll buy it. Right? Like
Well,
it was crazy.
what's amazing is some of those counties, the county officials actually do not know how to find the properties or anything about them, way less so than an experienced investor. Let's say, someone who's has knowledge of Hudspeth County, like you can teach those county officials how to find them based on the quarter calls or the legal descriptions.
Yep. And I was also fortunate because my dad had been a real estate appraiser and had all the maps of everything way back in the day, so we could find everything. Right, you find the section and just work your way around it. Yeah.
Yeah, yeah. Nowadays it's easy with all the GIS mapping and online and everything.
I
But
still think going back, but John, like going back to like the whole flipping deal, I still think there's a great opportunity as long as you're selling owner financing.
hmm, do you think it's harder to find the lots? Because I think it's a lot harder to find good deals.
Yes, 100%.
More direct mail, less acceptance rate. It's used to be, shoot, I don't even know, 1 in 100 or 1 in 200 pieces of mail.
Depending on where you're at and depending on what you offered, right? That's the key, right? Like you can still buy good stuff at a pretty damn good basis. You're just not going
Yeah.
to get it what it used to be, and that's just the way it is, right? Like they caught up. The world caught up a little bit, right? That's okay.
Well, it's all about catching trends, and I think maybe the next trend that everyone seems to be going towards is the subdividing space, for good or for worse. I don't know. That's what I see. That's what everyone and their mother and brother wants to learn how to subdivide land nowadays.
And I'm part of the problem with that.
Well, uh, interestingly enough, though, the complexities and difficulties with doing that makes it very difficult for most people to do that. I mean, to buy a 10-acre piece and flip it, just run out a mobile notary and self close it or run it through a title company real quick is very simple. But when you start getting into the subdividing space, to know the regulations, to know the water situation, to be able to build roads and even have the capital to do all that, I think is creating a huge barrier to entry for most wannabes, basically.
Well, and here's another cool thing with that too, John, is obviously we're doing a rural subdivides, right? You're talking about 10 acres and above in the state of Texas, 5.5, 5 acres and above in Tennessee. These places like that where you can come in, do a meets and bounds, things like this. What's really interesting is now I've really been diving into like the boutique subdivisions, right? The 1 acre plus lots, things like this. That makes it even harder, right?
Mm-hmm.
And then we've got two properties that we have contracts on, but we're waiting on builders to give us a thumbs up. Now we're looking at buying for 5 million, putting 8 million into it, but now the new valuation is 42 million, right? That's a
Yeah, it's
very,
not
very
bad.
small pool. That's a very, very small pool that can play in that game. And that's where I've gone. I was like, I don't want to go to do all of I find the roads, I make the all, one way or other. I have no problems building roads. I have no problems doing that as long as the numbers make sense. That's the key. It's just math and your risk, right? That's the whole point. But most of these people aren't bankable, first of all, and they don't know their numbers well enough to do anything.
Yeah. And as you grow at scale, I think the banks and whether it's private money with funds or lenders obviously become essential. And I remember back to the days of my first subdivision. I think it was you that I had tried to raise some money from or do the deal with, and that was our good old Hudspeth County days. Where, speaking of rural subdivisions, you're talking, it was a 534-acre piece that I remember I bought it for $40,000, and I was like crapping my pants. I was like, who am I calling? Trevor. There's a couple other land guys involved there that I was calling, trying to like, hey, can you give me some money for this deal? And I actually ended up just borrowing the money from from my dad and just doing it all myself, which thank God I did, because I think we sold that sucker for like 300 grand back in 2017.
Yeah, no, for sure. And the thing is that's where we hung ourselves on that deal, because literally my dad was like, who in God's name wants to buy a bunch of that shit out there, right? It's almost, you have
No.
the expert blindness, right? They're just, you don't understand who the heck would want to buy that, because you drive through there, you know, all that country and it's garbage, and all you do is see like old, freaking broken down cars and shit like this, and you're like, well, no one wants that. You're not the market, right? And the cool thing with that, when you buy it at such a low basis, if you buy anything at such a low basis, but especially a hard asset that can actually get some sort of comps on, you're going to do well, right? Like, let's not kid ourselves. You're going to do A-okay buying great assets at a great price and having the ability to owner finance, offer the terms you need to, things like this. I don't care what that is. You're going to do great, right? Like 100%.
Yeah, I mean, if you could buy a piece of land for $1, as long as it's worth 2 or 3, you're doubling or tripling your money. It's like, I don't care how worthless that land might be. It could be a freaking junkyard, but at the end of the day, it probably has some value. It all comes down to your purchase price, which is the name of the game in real estate. I think sometimes we overcomplicate it. Have you ever lost money on a land deal?
I'm sorry. Have I ever lost money on a land deal?
Yeah, because I
Not
think I'm
yet.
in my first one where I might lose a little bit of money,
Well, I'll tell
which
you
is hard to believe.
that deal in Bosque County that we had such a big pain in the butt with the county. Remember that
Yeah.
Justin and I and Josh all talked about? We just
Hmm.
did an auction on that one, got that all completely sold in one day. Like,
Yeah,
but
that's
literally it
insane.
took us 3 years to get it all jumped through, because we literally had to basically sue the county until the attorney, no, this is the new law, this is where it's at, one way or other. I mean, we still ended up making I think we're going to end up making like 23% on an annualized basis, right? So like 60% on our money. I have not yet, but I mean, there's always a first.
Yeah, I think I might be in my first one where um, out near Abilene, we bought this
Uh-huh.
farm, and the market just completely dried up out there, which was crazy because just 2 miles to the east of this project, I sold, it was like 300 acres back in late 2023. And so 2024 rolls around, and I'm like, okay, this property 2 miles away, it's 230 acres. Like, it's going to be set to go. We could just keep it simple and do 25 or 30 acre tracts there. And so I ripped this thing at what I think is a good price. And it's been 7 months now, and we've gotten one out of 9 lots sold, which, bought at like 2,800 an acre, and the sales price is like $4,000 an acre, which is like not ideal as is, plus
No.
the time period. So I really learned on that one that like markets can change. They can change quickly. It was an election year, um, and several different things going on with the market. And I mean, I think I maybe got a little bit cocky on that one and thought that I knew what I was doing, when in reality it was just a horrible purchase.
What school district is it out over there?
Anson.
Okay, a little small deal like that. Yeah, that's
Yep.
where if that was in Jim Ned's school district, it would have sold in a heartbeat. You know,
Yeah, and it's crazy how the school districts make such a huge difference too. There's some
huge difference. Yep.
districts people just want to be in. It's like hotcakes.
Mm-hmm. Mm-hmm. If that was in Wiley or Jim Ned or something like that, that sucker would have been taken up for sure.
And then conversely, at the same time, there's other areas where school districts make basically no difference, just because you can't find land at all there, and people are going to take whatever they can get.
Yep. 100%. Right. That's the hard part. That's the hard
Which
part.
is why I always tell people, especially when you get into the subdividing component of land, it's so important to like narrow focus on one market. I think, you have your niche where you're doing these ranches and stuff in certain parts of Texas. I have my niche, and then you have people who think that they're going to take the flipping model and apply it to subdividing, and they're like, I got leads in North Carolina, I got leads in Virginia, I got a lead in Texas and Tennessee. I'm like, dude, how are you going to know all these different regulations and school districts and cities and counties? Like, it would just be impossible.
Yep. And especially if you're going to do anything smaller than 10 acres, right? Now you're going to really get into it, because now each county or each city, you're going to have completely different people. You're gonna have to win those. You're gonna have to win those votes before you ever go to vote, right? So you got to talk
Yep.
with planning and zoning. You got to work with all this. You got to work with water. You got to all of this stuff, especially now. Past year, like yeah, last year was terrible. Like it was dead. It was dead, right? Like nothing hardly sold. Even some of the stuff. I had two projects I was most proud of. Like most beautiful product I've ever built. Hardly anything moved, right? Like
Hmm.
just, but also a lot of my stuff is higher dollar stuff, right? Especially a lot of the stuff that we've got that's worth 15 to 25,000 bucks an acre, right? Now you got a 10-acre property that's 250, 230, 250,000 bucks. Plus you're going to build a home on it. Now you got nearly $1 million property with a nice barn door or a nicer house, 2,200 square feet, things like this. Now you're looking at a full $1 million price at a 9% interest rate. Everyone was just like, kick rocks.
Yeah. Are you owner financing much of those, or is it pretty much all people getting bank financing?
Not yet, brother. That's been the whole goal for the past year. I've had multiple meetings with family offices, kind of showing them what land is and the opportunity. I still think that offering owner financing on good quality dirt that you can, whether that is the buy it cheap enough or force appreciation on it and offer an owner financing terms, dude. You buy something for 5,000, you sell it for 10,000 bucks an acre, and then you offer terms on it. You run the numbers on that 20-year amortization with a 7-year balloon. You're still cutting 22% coupons, not counting any down payment.
Yeah. And right now I've kind of made a whole pivot in my business model where we're starting to transition to higher down payments when I sell the land, asking for higher down payments, and we're doing our first project through the RMLO process
Yep.
um, right now, actually, which has been a learning curve and kind of a pain in the butt, but at the same time, I know a lot of the note buyers on the back end are going to be happy, and so it's been a learning experience, but I think it's something that must be done, basically.
100%. I could not agree with you more. The thing is, and this is where I'm trying to figure out, right? So, and this is where I'm working towards, is to be able to build enough of those. Say you have a project, like one project we got is 130 acres. We bought it for 8,500 bucks an acre. It sells for about 22 to 20,000 bucks an acre, right? Comes with minerals, great product, everything else outside of College Station. The thing is if you were to offer that owner financing, take all of that together, you could hypothecate that into long-term debt, right?
Hmm.
But you got to have the cash in order to run all that stuff. So that's something that I'm working on right now. I've got a bank that's willing to do up to 80%. They really will probably only want to do 75%, right? But the thing is their actual value that they're at, they're still at 60 cents or less on the dollar, right?
Yep.
And so, anyways, so that's kind of a fail stop. But to be honest with you, it's to the whole deal the past year. I got my ass handed to me, but like it's all raising capital. Capital is everything. I got more damn deal flow, more projects that I could ever dream of doing. Now it comes to the capital side.
Yeah, the capital side is huge. Obviously, I just started my own fund, which is not really off the ground yet because I've yet to actually raise into it. But the PPM and the entity and everything is made, so it's going to be interesting to explore that. But I think at the end of the day, when you get into real scale, like your 30, 40, $50 million subdivisions that you had mentioned, like I got an offer out on one right now for 13.25 million, and it's worth probably 60 or 70. And you're talking 13 million in land plus probably 15 million in infrastructure. And so to be able to originate 60 or 70 million dollars worth of notes on the back end, it's like you really need, if you want to manage and or sell those notes, like you really need some real money behind you, whether it's family offices or private equity or banks who can hypothecate or lend on notes or buy the notes. I mean, it's hard to sell $60 million worth of notes on paper stack.
Yeah, you're not going to. You're not going to. And if you do, you're going to get ripped apart, right? Like your returns,
Yeah.
they're gonna buy down their risk so much it's ridiculous, right? And so that's where I've been having these conversations, like with real money guys, and they're chewing me up and spitting me out, right? Like on some of the questions and how they do the formations and everything else. I'm like, I'm not that smart. This is what we do. We buy, we add the value. We have as is appraisals, third party appraisals. We have bulk appraisals. We have new valuations. These are the comps, right? This is where it is. This is the new value that we build. We don't touch it. We can't double the value of the damn thing, right? This is what we would sell it at. Here are the terms. This is where we need to be. This is where it is. This is the number. And it's almost like these guys that are true finance guys, it's almost too simple for them, right?
Well, I think as you get bigger and operate at scale, it actually does get simpler to a degree. Once you get the systems and processes in place and the knowledge to do some of this stuff, I think it has a real chance to grow exponentially. Like the one that we're in the middle of, for instance, it's 415 acres. We got 76 lots, and it's pretty much all sold. It's been 2 weeks now, which is insane. And it wouldn't have been that seamless if I didn't have my own in-house sales guy, my own in-house ops manager, and we enlisted a boots on the ground realtor to help us who's bilingual out there in the field. So like any person who can't find the land or whatever, it's like, go talk to Anna. She'll show you. Oh, she speaks Spanish as well. Way different than the one-off land flipper who is hustling and bustling and trying to get their first couple deals and, grinding and trying to sell it themselves on Facebook or Craigslist or land.com or whatever it is.
You have to have a certain amount of scale, right? Like it's whether you're, if you're a farmer that has 100 acres and you still got to buy the same tractor, or you're a farmer that's got 1,000 acres and the tractor still works for 1,000 acres, right? The price per acre is much, much lower, and it carries those carrying costs that you have to have in place, right? Your program has to be big enough in order for you to carry that in-house guy and to carry all of it. You know what I mean? Like it's just
very true,
right? The nice thing is you didn't start that way, right? And so you can get there, people. It's not easy. It's not easy, man. It's not easy at all.
What do you think is the biggest misconception that the beginning land person has? Because to me, I think they come in, they think it's going to be this easy thing and be a bunch of passive income. And they start trying to delegate way too quickly and get a million VAs, and they never actually get anything done. They don't know what they're delegating. They think it's going to be this super easy thing. They're going to have a transactional coordinator. They're just going to build this business and completely step out of it. And they're going to have like 4 or 5 VAs running it and just print money. I mean, I know maybe like a few people who've been able to successfully pull that off out of probably thousands or tens of thousands. And I think they're extreme outliers. I mean, I haven't been able to pull that off, but you get, I guess maybe someone like a Mark Podolsky was able to pull that off, or someone like that, but it's not the real world.
He also has people that are willing to, Tate that does a bunch of his partnership stuff and things like that, right? And so Mark is a marketer and builds the brand and everything else, right? But, Scott Todd, some of those guys, right? Like some of those guys, but they were high-level guys anyway before they ever came to land. You know what I mean? They knew what it meant to grind. They knew what it meant to build a business. You know what I mean? When you've been a C-suite on a top, 500 company or 100 company, right? Like you understand processes, you understand all this stuff. But for anybody just coming off the street, I think the biggest misconception is that cheap property is easy to sell. It is hard to sell. I hate 2 acres in Cochise. I hate it.
I like that. Yeah, I guess I've never thought about it that way. That is true, though.
But offering owner financing on a $150,000 piece of dirt in Texas that's got some trees or got some water, pretty fucking easy, right? Like compared to selling 2 acres for $100 a month in Cochise, as far as the number of, and that's another thing too, scale, right? Like you can pay a broker to run out there and show all that stuff, right? The project pays for its own sales team. Right?
Yeah.
Wherever that is, they pay for their own sales team, where you have to pay for everything out of your own pocket on the small stuff, right? And it doesn't carry itself, and no one wants no broker is going to be like, oh yeah, I want 17 listings of 2 acre properties in Cochise, right?
That's a good point. Cheap property is not easy to sell. I guess we never really thought about it that way, but it's so true. Like you get a prime piece of real estate that's improved right near the city in a hot spot where people want it. I mean, it's going to sell itself, basically.
All I do is buy irreplaceable dirt now. I want to be in great places, even if it's more expensive. And here's the thing too, John. Everyone talks about like apartments, right? You're buying high dollar apartments, really good places. The cap rate is real low, right? the good thing about that, high value properties, if you have a game plan to add value, the valuations go through the roof, right? If I go buy 1,000 acres in Hudspeth and cut it into tens, I added, $1,000 an acre to the valuation of that, right? If I go buy 1,000 acres in, I don't know, east of Austin somewhere, and I buy it for $20,000 an acre, but now the new valuation is $40,000 an acre, right? I just added another $4 million to my net worth with about the same amount of work.
Yeah, and it's a lot easier to sell and a lot more desirable product.
1,000,000%. So I'm going like that's where me it's all the capital stack, whether that's debt, equity, whatever that is. That's all I've worked on. I'm getting my butt handed to me, but now we're starting to get some traction. Now we're starting to get some things going, right? And it's just it's just the same thing with when you first started, right? Like, yeah, you get yelled at, you get told you're an idiot. It's okay. Like, you just can't give up, right?
Yeah, I mean, people get too offended and are too sensitive to other people's words, or being told no, which is part of business, honestly.
All day long, every day. And the cool thing, here's the thing that really hurts my feelings is I really think that land is really the best opportunity in real estate. It's still owned basically by mom and pops. It's still operated basically by mom and pops. You know what I mean? We're still mom and pop, right, John? We really are. We're trying not to be, but we are, right? And so, you know what I mean? And so, like, compared to apartment complexes, industrial spaces, all this other stuff, I think it's by far the best thing to do. Um, all this, but then I start talking to some of these guys I had a guy in Toronto with a giant group that has $10 billion under management, right? And I was explaining to him, he's like, "Oh, those numbers are okay," and you're just like,
they're okay.
You know what I mean? Because he's like, dude, you don't understand on our side, right? And how they have and the cheap amount of capital and how they have their debt stacked and all this other stuff. It's a whole nother ballgame when you walk in and you're starting talking about $100 million and how you're going to place that, where it's going to go, things like this. And their opportunity cost on that, even though we think land is the best asset ever, doesn't mean that it really is, especially for them and their goals and their investors' goals. And that has been the hardest part for me the last few months is just being like, okay, my kid's not the cutest kid in the class, right? That's just the way it is.
What are you seeing from the like the land, the market side on the land side, like sellers in particular, like people still wanting crazy high amounts of money for their property, or what's kind of the deal?
They still want the numbers, give or take, right? But most of them have come back down to like reality within some sort of a scope, right? Because when you say, hey, these are our comps, these are our numbers, because that's what I do a lot of times, right? Like a lot of our stuff is like, hey, this is our numbers. I'm here to make money this way. I can do it this way, right? If you want to owner finance, short-term owner finance, let me do all the add-ons, build the value, cash you out within a year or two, whatever that is. Like I have an option for you, right? I can do whatever. I can do, improvements on your property and you pay me on the sale of the property, right? I can do list it on the brokerage end. I can do whatever, right? Like my whole goal is to be vertically integrated as humanly possible, right? If it comes to dirt, one way or the other. However, yeah, I mean, a lot of people obviously they want top dollar and they want it yesterday, right? So it just depends. There's no such thing as like a land emergency. You know this, right? Like if they're going to pay $112 in taxes because it's ag exemption, like no one's ever like, oh God, I have to pay this unless it's a family fight or someone's about to die.
Yeah. No, I would agree. I think a lot of people are starting to come back down to reality. But at the end of the day, I mean, there's, at least in my experience, there's been deals in every single market, every single year. I mean, yeah, maybe last year was a little bit slower, but we still did some good projects. And then this year has been crazy thus far. But I mean, I can't complain. I can only imagine if and when interest rates come down a little bit more, could get real exciting. As long as we can still find deals.
Neutral, man. Just bring them down to neutral. You know what I mean? 100%.
I fear though if they come down, then the sellers will become unreasonable again on the bulk acreage and want to be cashed out in every instance and want crazy high prices.
I don't know. Right? If it's easy to buy, it's hard to sell. It's hard to sell. It's easy to buy. I mean, it's just welcome to real estate, right? We just got a tail end of a really really good bull run, and now we're nothing changed with our business, nothing changed with the land. You're like, dude, this shit sold for 90 days, and we made $3 million a year ago. Doesn't make any difference, right? Only thing that's changed is the cost of capital, and until you have enough capital to be able to not worry about that, right? Being able to offer the owner financing, be able to do all that stuff. That's where I'm trying to get. I'm obviously not there yet, but that's the whole deal, is to be able to moderate those fucking swings, man.
Yeah, well, the game changed for me personally once I a learned how to sell my notes, and b started using private money, because at the end of the day, look, you only have so much of your own money. Even if you're purchasing land on owner financing, there's only so much debt you could take on from these sellers. And then conversely, what are you going to do about improvements then? Even if, it's just some light surveying or whatever, but a lot of these, it's building roads. Like, just got done forking over another 125 G's on a little 3/4 mile gravel road that I did. And so it's like, you do that enough times, you're going to run into multi six, even multi seven figures of just capex for improving your land, whether it's wells or roads or surveying, whatever it is. People underestimate that. They think they're just going to go out and rip a subdivision and it's going to be sell it the next day, which some cases you can for sure, but there's oftentimes some sort of hard capital cost associated.
Well, and that's the whole deal. That's why I keep telling everybody, right? Like, you got two things you're going to deal with every single day until the day you die, right? Deal flow and capital, right? Deal flow, capital, deal flow, right? Right now, I'm like, I've got to get the capital running. And the thing is we talk about that, like, that is the limiting factor for just about everybody, right? And if you can raise that kind of money and raise it in the right way, and use it and build it, and to be a good steward of it on the projects, right? That's why I always over deliver, right? Even if things suck sometimes, I don't take as much money, right? I make sure that people get paid whatever it is. If I've got some projects I probably won't make a squat on, but I'm always going to make sure that my investors are taken care of, right? Like, that's just the way it is, right? Because if no other reason, you can do 100 great deals and one bad deal that goes haywire, that you purposely screwed up, or accidentally screwed up, whatever. Like, that can ruin you. You know what I mean? And so that's where I'm like, hey, you got to raise the capital. You got to be a good steward of it. You got to build good projects. But more importantly, these counties are making sure that you build good product, right? You will get run out. You will get run out if you build a bunch of shit. You will get run out. No one's going to sell it to you. No one's going to dig with you. No one's going to want to buy anything. That's just the way it is, right? Especially these more rural counties, man.
What's more important, capital or deal flow?
Right now, capital.
You think that changes through different cycles of the business, or is one always more important? Because I would say capital is always more important.
If I find enough cheap capital, John, anything can be a deal.
My counter argument to that, though, is that ethically, you want to put that capital to work in the best form possible. So, I've worked with some people before, like, man, I got so much capital invest, I want to find a deal. It's like, okay, I wouldn't just rush out if I had $1 billion and just start, looking at everything as a potential deal. If it has freaking single digit returns as a subdivision in the land space, like, that is absolute trash. But, if it had 50, 60, 100% returns, that is, obviously a deal that I would do. So, I think sometimes too much capital can be dangerous, because then you start kind of stretching and reaching.
I want that problem. But again, we play a hard rule that we're not touching anything if we can't do simple cash on cash 50%, and we really won't want to touch it unless we can do cash on cash 100%.
Yeah.
So, like, you know what I mean? Like, I just don't want to mess with it.
Cash on cash 100%. Yeah, that's pretty good. What do you got going on right now? Any big projects?
Well, that deal that I just got done telling you about, right? We've got an under contract. That's 180 acres in between, just west of Houston there. That would be like 700 lots, right?
Damn.
So that's a 6-year project, right? And it's interesting. I was listening to a podcast a while back, and there's a giant what do you call it, master plan guy out of Dallas, and he was talking about it.
Okay.
He builds all these giant deals out. I mean, he basically built McKinney and all that stuff northeast of Dallas, and he was talking about how he's got these projects that master plan communities are great overall rate or overall returns, but they're terrible IRRs just because they take time. Right.
Yeah. Why does it take so long? You said 6 years. Like, what are we talking? Like different phases? Like what approvals? Like what's required?
Because what we do is we have a regional buyer that will buy 100 to 125 every single year.
Okay. To build on those lots.
Right.
Okay.
So that's where obviously you could refi, right? You could pull all your money plus some tax free. You know what I mean? As long as you got somebody there. But the thing is whenever you have, and this is a deal that I try not to mess with myself. I'm looking at a deal just on the complete opposite end, just outside of Amarillo. That's 300 a half section. That would all be 10-acre tracts. But now I'm looking at 34 of them, right? Now
Okay.
I try not to build too much inventory in any one spot. My sweet spot is 8 to 12 lots in any one spot because
you far surpassed that with that Houston deal.
But that's what I'm saying. But again, those are we build roads that they're literally buying. They put 10% of the total project down as hard money, right? Like as far as a hard down payment on it, the builder is. So that's where like we're building asphalt, curb and gutter. True development, right? Horizontal development. All they do is they come up and they pour concrete for the houses.
Okay,
That's a whole different ballgame.
Yeah, in that case, you're kind of restricting your buyer pool to builders, right? Like
1,000,000%, 100%, right?
Yeah, which for me, I'm obviously not a fan of because I want to sell to Joe Schmo, and it happens a lot quicker than Builder Bob, let's call him, who's coming in and has his takedown and needs to build them out and diversify his risk, not be too exposed at once. So I'm curious to pick your brain because I've done the project I'm doing right now will be like call it $8 million gross. And that's kind of the biggest I've done. I've done a couple now in the $5 to $8 million range, several of them, and really trying to examine how to go bigger. And I know it can be done. Obviously, I know how to do it for the most part, but obviously, I think it takes a very specific project and a very specific market, one that can absorb it, one that is not going to tie me up in platting for 2 years, and one that can be relatively easily carried out relatively easily. And like the one I have an offer on now for 13.25 million, like that one fits the bill perfectly. Like, it could be probably sell through all of it in 6 to 12 months and originate 50 to 60, it's going to be more than that, 60 to $70 million worth of paper on that. I think there's markets out there that can do it, whether you're in the huge ranches space, selling 10 to 50 acre lots, or in the sub-acre space. Like the area north of Houston, for instance, I think is a great area. North of DFW is a great area, even south of DFW if you can find the water.
You and everybody else on 75 corridor right there. Yeah, dude.
So where do you think this business is scalable to, and how feasible is it?
Just depends on. Okay, so on the one that you're talking about, like the big one, are you? What's the product? What's the end product? Like what is the product?
half acre lots with little to no restrictions, mobile home capable, water infrastructure, paved road.
So are you building your own mud?
No.
It has water to it.
Yes.
Okay. And it has.
But even from
for that.
Yes, and even from a 1 acre perspective, I think there's plenty of opportunity in Texas from the 1 to 10 acre level. Like the one I'm doing right now is called 8 mil, and it's all water well. Yep. So I think even where wells are necessary, I think there's still capacity.
Two options on that, right? Because you have the more rural, the lower end, right, acreage lots, right, like what you're talking about, like mobile home ready. Things like this, or you have the 1 acre lots that you would, for me, I would not do anything more than probably 35 acres, right? I call that a boutique subdivision. They're going to have 750 to $1 million houses on it, right? But it's
Okay.
probably going to take, and it's going to be real close to a real city, right? It's going to be real close there. We're going to have to, they're going to water wells, but we're going to build a real road. We're going to do all this other stuff. Like those right there, they still may take 2 years to sell out, right? Even though the value that you did, like we've got one west of Houston right now that's 37 acres that we could buy for 17,000 bucks an acre. No, excuse me, 17,000. Okay, it's 37 acres and it's nearly 30,000 bucks an acre. Excuse me, but the
Okay.
1 acre lots are selling for 150 to 175,000 bucks an acre,
Yeah. See,
right?
now that's the spread right there.
But it may take a couple years to do that. But I would not want to build 200 of those. I've
Mm.
now saturated my market, in my opinion,
Okay. It's
right?
interesting because I feel like that close to Houston, the market would be a
And
lot.
maybe I'm just an idiot and a scaredy cat, John. I don't know, right? Like this would be the first this would be the first acreage lot subdivision that I've done, right? And it was just an
Okay.
easy one, right? We get a variance on the cul-de-sac. It's only 580 feet anyway, right? Like it's not that big, right? And so you build a nice gate, a new nice entrance. You do all the fun stuff like that. It's just a freaking cow pasture. You know what I
Man,
mean?
I think it's going to sell out a lot quicker than that. I mean,
I hope so. I hope so. But again, I don't know that market as well. And I don't know the way the world is going. If Trump throws a fit and yeah, I don't know, dude. Right? Like that's all we do all day long is we just stand there and we go, is the risk versus reward and how hard I'm gonna have to work on this thing. That's all we do.
yeah. My I agree. My success with acre like 1 to 5 acre lots has been good. I think uh, they sell out. And interestingly enough, a lot of people only want like 1 acre or 5 acres, which is
Yep.
like a weird thing to think about because I don't know if it's me and like I'm trying to go buy a piece of land and live on the land. Like I want, as much as possible so I don't have to see my neighbor. Like I'm like, put me out on the ranch or like in the desert or like middle of nowhere. But a lot of people are just seemingly fine with like a half acre or 1 acre or 5 acres. And it's like, well, your neighbor's right next door in a mobile home or a barn dough or whatever, then you got people all around you, so it's almost like just a rural subdivision with affordable housing outside of the city. And it just blows my mind that a lot of people actually would prefer that over a 10 or a 50 acre piece or you know something like that. And the problem I have with it though is you could let's say your cost basis in all in is like 20,000 an acre on a 1 acre lot in a subdivision, and you could sell it for 60 or 80,000 an acre. It's like, well, you're netting, let's say, 50 grand an acre. I mean, if you want to do a $50 million project, you need to sell 1,000 of those lots, and that is a lot of lots. Like, let's just say the market can absorb it, like I think mine can, where we have this project going and absorb it within a year. But to actually make and manage and perhaps sell 1,000 pieces of paper on the aftermarket, that is actually, I think, a bigger problem than creating the subdivision in and of itself. Now let's take it from a different perspective, like a boutique subdivision or larger ranches where you can buy a 10-acre lot, and instead of now netting 50,000 on the one lot, you can net like 150 or 200,000 on a lot. It's like, well, now I need to sell way less lots to reach my end goal. So that's kind of something that I think about actively in scaling a business.
But do you have enough people that can even afford that, right? And so that's what you
Yeah.
bounce up against, right? Where you've got a 50,000 or $100,000 acre lot or $80,000
Yep.
1 acre lot compared to a $200,000 lot, like that deal that we got $250,000 is basically the cheapest we got there outside of College Station. Love that property, selling mineral rights, all best product I've ever built. Nothing. Well, we had a bad realtor first of all. That was my bad. But also like interest rates. Literally, they would come out there and then they would have their builder come out there and they'd say this is what it's cost, and it was like $850,000 all in, and at 9% interest, everyone was like, no, hell no. Very few people can afford that, right? And
Yep.
so that's a, it depends on your
Well, your
market,
buyer
where
pool,
you are,
yeah, your
where you live
buyer
in
pool
Austin, where you live in
diminishes.
Amarillo, right? Like there's a million different ways to look at it. I like to be very surgical. I like to come in, come out, come in, come out. You know what I mean? I don't want to build too much product on one side unless I've got somebody that would actually be willing to put real money down and to put it at a takeaway, right? That is a bankable asset, right? That contract, and a banker would be willing to say, hey, this is Toll Brothers or this is D.R. Horton or this is whatever it is. Somebody that go about it that way. But I mean, again, the best way to do it, John, and you've been on this for a while, is to still be able to buy it and sell them owner finance, right? I 100% agree with you on that.
Which is the problem when you get to the higher price point, because who's going to owner finance a $300,000 piece of land? At that point, they're just going to be using banks. I mean,
100%.
so the more affordable product definitely opens up and has a lot wider buyer pool when it comes to the owner finance game. But you have to have that capacity to sell the notes or manage them in that case, which
Yep.
is, I have probably 50 contracts at least in my inbox for this project we're working now that I need to get over to the loan originator. It's like just all came at once. And like, I was busy last week and over the weekend. And it's like, that is, I guess, a good problem to have for you and your team. But at the same time, it's like, that it, it gets to be a management nightmare at a certain scale and certain level. You almost need like a Madison management or a third party note servicer and third parties in some of these deals and some of these cases.
Yeah, or August REI or somebody like that that can do all that. That they pay the fee, the extra $20 a month or whatever it is, and they do it for you
Mm-hmm.
for sure.
Yeah, the thing I don't like about them though is they're not as fast and hard on the borrowers, and don't I tend to get in there and run the collections game a little bit myself even, and kind of say, hey, where's the monthly payment? And I've been quicker and quicker nowadays to pull the trigger on noticing and foreclosing, just because you do this long enough and people just kind of start to get under your skin. You've heard every single excuse in the book and you're just like, yeah, buddy, I'll see you at the courthouse steps first Tuesday next month.
Yeah, yeah, 100%, 100%. Where you want to be in next 5 years? Like, what's John's deal here?
$100 million land business, and the most foremost known go-to guy in the land space. So I think both of those are achievable. The $100 million company, easily doable, but harder than, if I'm being honest, a little bit harder than I thought. I've made a couple hires here in the last year, and it's helped me greatly. But just figuring out business, figuring out everything, taxes, business, corporate structures, job roles, how much am I paying people, when to hire, when to fire. I mean, it's like, actually, this is not, when I first started this business, leaving the engineer world, this is not really what I expected. Having, like 10 employees out in Cornutus, 2 employees full-time Jazzland, and, the accountant and attorney and bookkeeper and everything. And it's not really what I signed up for at the beginning. But as I've gone along, I've actually, kind of morphed into this, and have sort of, at least recently, really started to enjoy it and just kind of embrace it, and wanting to see how far I can take it. At the beginning, I was very much the opposite. I was like, man, I don't want to hire people. I just want to do it all myself. And then you get to a point where it's like, obviously you need to, start actually learning how to build and run a business, which is not for everybody. Some people are going to be doing 10 flips a year and make a couple $100,000 and have a lifestyle business, and that's cool. That's just not my goal.
Yeah. What's like? What is it that gets you, not business wise, but what is it that gets you going, and what does that building that $100 million business actually achieve? Not just saying I own $100 million business and I'm the man in land, but what does that achieve for John? Right, little John in Michigan growing up, like what did
Yeah.
that achieve for you, right?
So everyone has different motivations, I think. And for some of us, it's money. For some of us, it's freedom, like having a lifestyle business. For some of us, it's having, whether it be the fancy cars or girls or whatever it is. For me personally, I've always just been very obsessed and very into being the most well respected, known, best person in whatever I do. Like when I was in school, when I was playing sports. I remember back at Tech, I used to love test day. Like there would be a big petroleum engineering test or something coming up. I'm like, dude, I'm ready to go. I can't wait to get the highest score and just crush this test. And I always used to love when those test scores came back and all the other engineering students were like, damn, man, I got a 50, I got a 65 on this. And I'm there. I'm like, yeah, I got like, a 90 or 95. Like it just really gets me going to just be the most known, respected top person in whatever I do. That's really what I strive for. I don't know. That's the mastery, the top of the craft is really just what motivates me. And I don't know, part of me, I've always been kind of raised and brought up very, I guess, strict in that way. Like you're lucky to be here. You have certain talents and certain short amount of time in whatever it is you're doing. So you ethically kind of have the responsibility to be the best that you can be. So, for me, I'm less about like the lifestyle. I could care less about traveling and all that crap. I do kind of like having nice things, but that's not nearly as high up on the list as like, man, I just want to be the most well known, respected person in my craft. And I think it's it's selfish in a way, but I realize that like selfishly unselfish, I need to help other people and kind of give value along the way. Like no one, whether it be a president or a big time business owner, has gotten to where they've been without creating a bunch of value and helping other people. So like as selfishly as I want to be like the best known person, like it's not gonna happen without helping other people. So I think it's kind of a good give and take in that sense.
I like it.
Keeps me grounded, even though I want to just freaking tear everyone's face off and just be the absolute top dog.
But the thing, like you said, we had, especially in in any capitalistic enterprise, we have to provide value to the marketplace, whether that's real or perceived. Right? We have to do that.
I think some people kind of it's like hate the player, hate the game, or don't hate the player, hate the game. Like don't hate the person, like hate the system and society that we were put in. We're in a capitalistic society. We're in a society that is forcing people to create value. It's forcing people to be the best of the best, and we live in a capitalistic society. So I could sit here and burn $100 bills and say I hate capitalism and down with society. I can say that and do that all I want, but it's not going to get me anywhere. Like I could, that would just be foolish. Like there's certain rules and things that are created in society that force you almost to do certain things, and you can either abide and play by those rules, or I think you're going to have some problems. And it just is what it is. And I always tell people, especially in the land space, when they start complaining about developing or something going in, it's like, don't hate me, because if it wasn't me, it would be someone else. Go talk to your representatives, go talk to your government, go talk to the people at power and try to make some change there, because I'm just doing what the system wants me to do. And if it isn't me, it's going to be somebody else. I guarantee it.
100%. That's the thing that everybody talks about us land fragmenters about, right? Everyone hates the land fragmenters. However,
Yeah.
overall value, especially in the state of Texas, have gone through the roof. All we do is bring affordability, right? Let's not kid ourselves, right? Most of these places that we buy 200 acres used to be 2,000 acres of generation ago, right? It's just the continuation of what it is, right? And so, especially by being able to come in and offer owner financing on terms that make sense for you as an individual that the banks do not allow us to do in the asset class that we're in, we're actually doing a, I always call it the Lord's work, but it's true. Like I would much rather have cows over condos, right? And how we set up a 5 or 10 acre tract on a subdivision, we keep way more grass for the eternity on that piece of dirt than someone that decides to come in 30 years and build a freaking condo complex, right? That's
Yeah.
that everybody hates you, and then you talk to one of the guys, and I highly suggest you actually have some conversation with the people that buy, right? Like one of my favorite times of all time was with a gentleman who bought property from us in Sutton County, and he literally was like tearing up. I met him out there. He was literally tearing up. He's like, "Man, I have wanted a place of my own out here. I've hunted out here forever. I've always wanted a place of my own out here." And he goes, "Now because of y'all, it's a small enough chunk that I can afford it. Thank you so much." And he like gave me
Mm,
like a didn't even go in for the handshake. Just went in for a hug, you know. And you look at,
nice.
and then you talk to the county judge, and during hunting season, and she goes, and she stopped by just to see how it was going on, and she's like, "Guess what?" I was like, "What?" He's like, "Two of the people that bought y'all's properties over there were at church on Sunday with us. They introduced themselves and
Nice.
everything." And I was like, "That is what people don't see. That's what the pain in the ass people don't understand. They're not part of it. They don't understand it. They don't want to be. They don't want to understand it, right?" So I just, man, yeah. If you let hate or hard times stop you, don't even get into this game. Especially
And
especially when it comes to the value add game, man. Just don't do it. It's not worth it.
there'll always be haters and trolls. 100%.
100%. Speaking of haters and trolls, great job on that one. What about social media, John?
What
Your
about it?
social media. I have not used social media for diddly squat. Obviously, you have used it for a few years here. I haven't really kept up with it one way or other, but like good, bad, ugly, as far as the business is concerned.
Well, for business, it's obviously great. You It's funny. I was at a 10x Growth Con last week, and I'm looking at the note right here. It was Grant who said it. He says social media is a mandatory part of your business now. It's no longer optional. And I think as we go even further and further in the future, that's going to be more and more true. And then it's going to become more true with artificial intelligence and AI. There's certain people such as yourself who are fortunate enough where they can be like, oh, I don't mess with social media. I don't need to be on it. And that is true for you. But for a
Maybe I need to
beginner,
be right. Like
well,
I'm fighting with one arm put behind my back.
yeah, yeah. Well, for the beginner nowadays, it's going to be harder and harder to get anywhere in most businesses without it. I mean, the networking, the credibility that it brings. There's so many pros: meeting investors, raising money, learning, just the knowledge and stuff and education that you see on there. The cons of them of social media is obvious. I mean, some people get obsessed with it. They post stupid shit, or they spend way too much time on it, or you know, uh, there are plenty of cons. But if used correctly, which if you're a educated reasonable business owner, you should have the discipline to be able to use social media correctly. I mean, uh, it always cracks me up when people delete their social medias because they quote unquote can't handle it or whatever it is. I think that is ridiculous. I personally have enough discipline where if I don't want to be on it, if I don't want to use it as much, or I can control myself, and I think that's the way it needs to be.
Yeah. So what are you on everything? Do you post all of it to everything, or what's kind of your platform? What do you think is the best for a land guy or gal or whatever?
Well, it depends. I'm on just about everything except TikTok. I mean, Instagram and YouTube are my biggest, but Facebook as well, which is, of course, tied into Instagram, but it's Facebook, Instagram, and YouTube. If you're trying to get leads for land or sell land or, um, things like that, I think Facebook is the best for education. I think it's obviously Instagram or YouTube. For networking, it's going to be Instagram. Like for investors, raising money, etc. I think Instagram is the place to be. For education, YouTube is the top dog, more long form based. So, I do a little bit of all of it. I could be doing way more if I actually built that side of my team out and had like, a full-time videographer slash editor and posted all the time. But I basically do everything myself. I think I do pretty much on the minimum, I think, of what needs to be done. I post 4 or 5 times a week. I do run ads. I'm pretty active, but for like your serious business owners, like the serious people, I'm on the lower scale of that. Like I'm pretty minimal. Like for someone who doesn't use it at all, they would see me be like, oh, he's all over social media. But in reality, you got some of your guys, whether it's like your Grant Cardones or freaking some of your huge real estate guys out there actively raising money, like they are all over it, posting multiple times a day. Like it's insane. Like, so I would be like a pipsqueak to them. But to someone like you who doesn't use it, you'd be like, oh, this dude's all over social media. So I'm somewhere in between, I guess.
Well, but again, it's just advertising, right? It's just letting the world know who
Mm-hmm.
you are, what you're doing, how you're doing it.
Well, for instance, on Cornutus, like the Facebook page, I've been spending a lot more time on. I'm actively growing it right now at about 800 followers a month, and we're getting like 400,000 or 500,000 views a month. And we're hosting these events now, and we're getting 500 to 1,000 people out there at events, and that's all from 2,000 or 3,000 of Facebook marketing per month, and I'm just geo-targeting to the local area. And so for that sort of business, it is just perfect, and it's pretty straightforward. It's like I post 2 times a week and run some geo-targeted ads. It takes me 10 minutes to post and set that up, and just answer comments and get people to like my page, and the business grows.
Cornutus today, Dale City tomorrow, huh?
Yeah, Del City. I think that place
like,
is.
What the hell are y'all talking about? I'm like,
Yeah.
Unless you spent time in the West Texas desert, you have no idea.
Del City is maybe a little bit too far gone. They just don't have a good location. That's their problem. They are
for sure.
far off that interstate and too much in the middle of nowhere.
Yeah. Well, that's awesome. So, what's your plan with Cornelius? I mean, is you're just trying to build a little hub out there, or what? What are you looking to do with it?
Yeah, I'm looking to hold it for basically forever and just cash flow it and build the business. I think it's going to have a lot of opportunities for me, whether it's just to be known as a local figure or a Texas-wide figure. It could be my step into politics one day if I ever decided to go that route. It certainly helps me from a networking perspective. People know that I own the town. I meet a lot of cool people. There'll probably be a lot of opportunity for celebrities in the near future, and so stuff like that. And I think that largely it's going to be like an event space for cool events for people to come hang out. That's what gets the most attention.
Dude, concerts out there, get some Texas guys and some artists and things like this and everything else. You build that out, like even starting out with, maybe it's not the craziest bands and things like this, but some of the up and comers or some of the lower end guys that have been around forever, and putting on concerts, doing things like that, making it hip, right? There's nothing in Marfa. Let's kid ourselves, right? Like there's nothing.
Yeah.
Yeah. Absolutely nothing.
Well, Marfa has a problem because one, it's gotten too expensive, but two, it doesn't have a giant population hub close to it. Cornutus has El Paso less than an hour away. Now Marfa has the good thing about it is it's grown to the point where it's a statewide thing. Everyone knows it across the state, but that's only because it's been going for so long.
And Big Bend, right? If there's not Big Bend, there's nothing there, 100%.
But yeah, our first concert's actually this weekend here in 5 days. We have 3 people coming out to perform, just local people. And that's our first one, which, hopefully will grow up to be freaking George Strait or something out there one day. It'd be freaking legit.
Dude, that's so awesome.
Taylor Swift.
Yeah, that's the deal, right? You get the people there, and everything else takes care of itself. That's awesome. That's freaking awesome.
Yep.
Dude. I love that. So you've been talking about that. You go back to the social media stuff. So that is paid advertising that you're doing with Cornutus, right? Do you do paid advertising on your other stuff too? Through your other businesses, or is that just more of the sharing what you're doing, how you're doing it, opportunities, things like that? I'm literally asking for myself because I need to do a better job with it.
So I do both, but for the most part, I don't do any paid advertising on like my personal stuff. If you see me out there slinging around garbage bags or doing crazy stuff at Cornutus or walking land and talking about a subdivision, I don't do any paid ads on that. And one thing I've always prided myself on is if you look at my followers, it's, over 100,000. You look at my engagement, you'll see 10, 20, 50,000 per video. Sometimes, they get up into the hundreds of thousands. I have all real followers. If you look at a lot of your other real estate guys, all you need to do is look at their 500,000 followers, then go to their videos and see they've had 50 people watch it. And they have a bunch of fake followers. So I don't pay for my followers. I don't run ads generally on all that personal stuff because why would I? I mean, I don't really have anything to sell. But, in certain cases, if I'm trying to sell my course or mentorship, then, we will run ads separate from the page on VSLs and different videos and whatnot. For land, I run a ton of Facebook ads. We run multi six figures per year in Facebook ads for land sales. Selling 10 acres in West Texas or whatever, we'll actually run, $100 a day for 10 days on, given tracks, for instance, and usually spend 150 to 200,000 per year in Facebook ads on land. But I think the biggest thing for education that you could be spending on is YouTube ads and long form. If you're actually like selling a course or something, probably Instagram in your case, if you're trying to raise money or something into the fund, like it'd be a good spot to run ads. But at the end of the day, I'm blessed because I have all those posts and just organic things that I put on my page. People, they see what I do. They find me interesting. They see me walking land. Then they see me hosting an event in Cornudas or, flipping a burger or whatever it is. So all that stuff is just natural and organic with real followers. And you got to post interesting shit. Otherwise people aren't going to follow or care what you're doing. That's why I always see people like posting them talking to office or whatnot into the mic, and they just do the little Instagram reel clips, and that stuff doesn't get any real engagement. No one really cares.
Yeah. Yeah. Well, and that's what my wife keeps harping on me. She's like, dude, you just went and looked at 3 different properties, met with landowners, did all this other stuff. Use that shit.
Yeah.
I'm like, yeah, no one cares.
A good selfie video of that, and just like if I were you, I'd be doing maybe like a project look backs, or actually what I used to do is take a whiteboard out on the property and do talks while I'm out on the land. And less so for you because I don't really think you care about what Joe Schmo thinks of Trevor's land deals. You're not into like the status or clout like me.
John. I desperately
but but for you to have the project look backs or some videos of you on the land meeting landowners for your future investors or banks or people putting money into you, I think they would like to see that and find that really interesting that you're actually out in the field practicing what you preach.
Okay. No, I appreciate that. Like I said, I always think that I'm an idiot and all the videos suck. And
well, they probably will at first.
Yeah.
Mine certainly did. And at a certain point, though, you get just comfortable with yourself behind the camera and you can just rip it off in one take.
Yeah, I'm a long ways from that. Maybe one of these days. But that's what I like to do in the podcast and the freeform stuff because I actually want to know what's going on, right? And I like interacting with other people and understanding what's good, bad, and ugly. So, yeah, no, that's cool. That's cool. So, last kind of deal here. What's your biggest problem right now, and what's the biggest problem you think for the next, to reach that 100 million in the next 5 years? Is it that advertising? Is it the deal flow? Is it the capital stack, the headaches, the building the real business? What do you think that is?
I think it's going to be the capital. Less so on the purchase of the land, but to get cashed out of these deals, whether it's a fund or a bank, because I think I can raise the capital and find the capital to purchase a $10 million piece of land or 20 million or whatever it is, but to actually get cashed out of that for 50 to 100 million on a particular project, I think that's going to be the biggest hurdle. And then to pair with that is definitely going to be the systems and processes to actually handle the sales of 1,500 lots. That's going to be multiple salespeople, probably multiple admin people. I think it'll be done with a small team, but probably 3 salespeople, 2 admin people, a bookkeeper, obviously dedicated, maybe 2 bookkeepers, and so it could be done with a small team of 5 to 10 people, I think.
Yeah, well, then you're a bank basically. You know what I mean?
Yeah.
That's really the hard part.
It's underestimated though how hard that stuff is to actually manage and keep track of. Like right now, I think I have like 125 notes or so actively on the books, which is not a lot. It's it's been higher, it's been lower, but that's where we're at right now. And even sometimes there, it's like shit, we forgot to mark this one as paid off, or Joe Schmo's calling because we forgot to deactivate his ACH and he paid an extra month and I have to refund him. And so those, something like that happens once a week or every other week or something, and we're pretty on top of it. So I could hardly imagine having 1,000 or 2,000 notes under management. It's going to be a fun time.
Yeah. Well, I mean, I guess you would just have one full-time person that does nothing but, I don't know what position you would call that, but babysitting basically.
Yeah, land tech or land technician or land admin or something like that.
Bastard is what you call it.
Transactional coordinator. Yeah, it's not a fun job, and but it needs to be done. And I don't even know if one person can handle that much. It'd probably need to be at least two.
Yeah, I agree with you. Right, just because of all the interaction, and you have one person this month, but now it's following up because this didn't work out. And then they're repeatedly late, and now they're trying to set up a new bank account, and you got to set up with them. But then
Yeah,
you've got other people that are now late. Anyway, yeah, I know the game. It's not fun. It sucks balls.
collections and management, fun time.
Yeah, yeah, but it's all this passive income.
That's it, man. It's just easy. It comes to the bank account every month, and we're sitting on the beach sipping pina coladas.
John, it's been fun. How can the people get a hold of you, see what you're doing, how you're doing it, whatever? What you got, bud?
Just at Jon Jasniak on all social medias. Instagram and YouTube are my two biggest ones. Check out Cornudas, Texas, cornudastexas.com. We're all over Facebook. Cornudas, Cornudas. I invite people to look up what that word actually means. And yeah, it's got an interesting history.
Okay, I've seen it on the map plenty of times and everything else, but I've never looked into it that way.
Do it. You'll laugh.
Awesome. We may have to do another one. We may have to deep dive into roads and surveyors and planning and zoning and all that stuff sometime soon, because I think a lot of people are scared of that. And to be honest
Yeah.
with you, I am too sometimes, just because of all the headaches that come with and the costs associated with building different types of roads and all the headaches. So
Cool.
and everything. Oh, are you having to deal with all your water feasibility studies? Is that turned into a lot of fun?
I've done 1.5 of them, and it's worked out okay, I guess. It's probably a conversation for another time, but it went all right. I mean, it didn't technically pass, but we got what we needed and what we wanted. So yeah.
Gotcha. Yeah, that's another thing that we can talk about and some or even offline and things like that. Talking about because I've been quoted wildly different costs on that
Mm-hmm.
from like
Yeah.
50 grand to 150 grand on the same project, and I'm like, why, right? So anyway, we can talk about that sometime.
Let's do it.
All right, buddy. Well, thank you very much, guys. Thank y'all for listening, and we will talk to you soon.
Thanks, Trevor.